All right, so let's take a good look at this again. So there's that question. We're still on that question. The best entry for longs in sterling in United States dollar against the yen. The best entry for longs, if you look at this 45 minutes, you can see we are going to get a bounce above zero line. The best entry for longs, position wise, is to wait until you have a negative momentum extreme, like we are seeing on the 5 and 3 minutes, and do the long against one of these levels, right? And hedge below the second level. So if I'm seeing negative momentum extremes on the 3 minutes and on the 2 minutes, even on the 5 minutes, I would want to long 153.40. I have longed 153.70. If I'm longing 153.70 and I fall to 153.30, I hedge to 153, like this yellow. Because I should be buying negative momentum. If I wait for reversal, the best trigger to take, of course, is double positive momentum on the 3 and 5 minutes, on the 5 and 15 minutes. If I wait for reversal, the market will have done this. Right? And of course, I will have missed some of the points. The market will have done this move. So the best entry is to buy negative momentum that you are seeing on the 3 and 5 minutes at any one of these fibs. So the first of these, 61.8, is 153.40. We did a bit of an early entry, a bit premature, but sustainable. We can protect it and hold it, 153.70, right? So if we fall below 153.30, over here 153.49, we hedge, of course, 153.30 in order to protect our entry. And take profits every 10 points. If we leave 61.8, we go to 50%. But the direction is still valid, everything is still valid, and we just make a bit of money, some money, accumulate some yield on the downside as the market continues on its consolidation, and hold along until the market breaks out higher. That's it. If we are more theoretically oriented, meaning we want to stand out until we have a bounce at the 200-point moving average, we have a bounce at 38.2%, we will do shorter entries. We may not get the entry, seriously. The market may bounce higher, and we will do shorter entries, meaning we'll only do one entry a week, for instance, seriously. In this case, we have to be, let's say, very seasoned traders. We have to have the ability to be patient, to wait, and only do very select entries at exact levels which may be seen and which may not be seen. If we lack this kind of trader mindset, or if we lack this kind of patience, I believe for most beginners or for most starting traders, we would lack this kind of mindset. What we do here is we implement a strategy that will protect our entries in the trend so that we are able to make utmost use of the trend by always taking a trending trade and recurring the entries, and therefore be able to accumulate yield. Because the actual mindset of us traders is a bit more aggressive, and therefore we will apply the strategy that, let's say, makes use of this mindset or would adapt with this mindset. Okay, so I hope that answers your question. Theoretically, the best entry is, of course, to wait for a lower 38.2 and 50% level and attempt to do the entry. Usually, this is not very practical or will not really fail. So the best entry is to buy negative momentum on the 3 and 5 minutes, protected by hedges. Take profit every 10 points on any hedge that you open. Keep holding the longs for the bounce higher. Look at the momentum plot at that time, if there's time, of course, whether you take out a level 1 or not. If you don't take out a level 1, take profit and redo the entry. If you take out a level 1, you are going to the next internal resistance on this hourly or 45-minute time frame. All right, let's move on. Keep in mind that we are attempting to support the upper boundary of our wedge. So even if you see a bit of red candles or negativity, we are seeing, of course, here a wedge, and we are seeing reversal out of the wedge. It is possible, of course, that the reversal will fail, but if we're seeing higher degree trigger on the 4 hours, good positive momentum on these 2 hours, this kind of negativity is actually a buy opportunity. All right. And again, we would protect it by hedges until the consolidation is over, spent. On the 3 minutes where we just did the entry, we are just getting lost like 5 to the downside. Again, we'll only hedge at 153.30 or 153.20 if we have the entry at 153.70. Hedging at 153.30 is best to take us to 153.20. Assuming we hedge 153.30, if we get there, the stop is just at this point 153.60, for instance, 153.65. If we haven't taken the longs, you would want to focus to take the longs at 153.20, 153, 153 itself, I believe, is 38.2%. Let's take it to 15 minutes. Oh, 153.40 is 61.8, 153 is 50%, not 38.2. In between is 153.20. So hedging 153.30 is best because it takes you immediately to 153.20. Hedges are always 38.2 between internal fibs. So this is 153.40, 38.2 is probably between 61.8 and 50%. That's probably 153.30. Takes you to 50%. All right, let's move on. We would want just to look quickly at sterling dollar and then move to Tech 100. Keep in mind that on the United States dollar against bear with us a second. All right, so on the dollar yen, being adaptable means that because of the volatility that we're going to see tonight during Mr. Powell's press conference, I'm looking at the 15-minute chart that we're just looking at. You see a 1 and a 2 and a 3, and there's a 4. A 4 is usually the lengthiest of the moves. We're saying that we're going to get a bounce out of 153.40, maybe 153. This is the bounce. It doesn't have to go all the way to 155. Why? Because I find most traders are very directional. They believe that a correction must finish because they are positioned to buy into the correction on a return back into the original direction. It doesn't have to be that way. A correction can take a very lengthy time, and therefore we must be adaptable. So adaptability again means that we are going to buy into what we perceive as a leg A, bottom. inside of something like 50% and take profit before rejection at leg one, bottom one. It can be that the market will break out higher if there is a fundamental, like tonight, like Mr. Paul speaking tonight. But it can be that the market rejects at level one, and this is an A, B, and a C. This is a correction 4. You have a 3 here, you're going to get a correction 4. So correction 4 usually does 38.2, even if it's in a wedge. Right? It doesn't really have to be just a wedge. It could be double inverted head and shoulders, and so on. And so forth. And therefore, we must be adaptable, because your question here implies the best entry. The best entry can vary in terms of time. So the best entry right now is what we have just been looking at, what we've just specified, can take us to a level 1. Can break higher. That's why it is the best entry. But it may turn out to be that 2-3 hours from now, going into FOMC, we get another better entry, because Mr. Powell will be speaking, and we have a 4A, we have a 4B, we may get a 4C. The best entry then, while Mr. Powell is speaking, is maybe 152.60, top of that level A, right? Close to that internal level 1. If we know the structure, if you know this, seriously, if you keep this in perspective when you're trading, the next thing, the very next thing you must do is to buy negative momentum, buy the cycle bottom, not buy a breakout above overbought level, because you're trading the internals, and the breakout on overbought levels is for position traders on the 1 hour time frame. A trigger, yes, on the 1 hour time frame will show you positive momentum above overbought levels and sustained negative and splatter momentum on the 15 minutes that does not do retractions, deep negative retractions. Then you can buy a breakout on the 1 hour if momentum is above overbought. But in this kind of cycle, this is a cycle. You want to buy the cycle bottom in order to make money. And that's what we're doing on the 3 and 2 minutes, and on the, even as far as the 5 and maybe even the 15 minutes. We're buying into the cycle bottom on reversal. Will the reversal take us higher, clear us higher? Because the higher degree cycle, the 1 hour is positive, the 2 hour is positive, it should. But this very instance, this very bounce, doesn't have to be. It may still reject at the cycle top. This is the cycle top. It's reject the cycle top one more time, draw back, buy it again, buy negative momentum. At some point, the cycle top will break out higher. So adaptability is key. Restraining or retracting your profit targets is also very important and key on your first entry. This is a correction. It will have 2 entries, A and C. I'm just doing an entry in A. All right, I restrict my take profit at a level 1. If I was doing an entry in C, I will attempt to break out of the cycle of the market top, or at least take profit at the market top on condition this high degree A, B, and we still get another high degree C. But on the first entry, just take profit at level 1. I could be misfortunate and the market breaks higher because Mr. Powell is speaking. But even then, I will know there's a breakout, and I'll see degree 3 momentum beginning to show on the very small or short-term cycles, and therefore be able to buy the cycle top.